You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back.
Well,
after what's been going on the last few days, eh?
Well, people were calling it Black Friday when it came to gold, but they didn't expect what would happen on Monday. Now, that was a black day if shining up your portfolio in terms of gold. Well,
it was a pretty huge drop looking at gold and silver, and when I saw the close on Friday, the week close, I figured Monday would be a weak opening, but I don't think anyone expected the kind of downdraft that we saw.
Well, so many people now are saying, see, some people are saying, we told you so. There was going to be a big drop. We didn't believe gold was going to be going over $2,000 an ounce this year. But that was 2 days of trading. And
I think anything that I would have to say today I'd have to preface it would be with the listener has to ask themselves, do you believe that we are still in a gold and silver or precious metals bull market? That would include platinum and palladium. And if so, why? Have the fundamentals changed? Have the reasons that we were bullish changed? And if you believe they have, if you read the newspapers and you believe Goldman Sachs, who often takes the opposite position that they recommend in public against their clients, then I guess you would either not want to buy anymore or you would sell what you have. But my premise is that the market is still intact, and it's going to take a little longer to get where we thought it would than we thought a couple weeks ago. But nothing has changed in the reasons why I would want to hold mining shares and be friendly toward the physical metals.
You were suggesting perhaps we should entitle today's show Precious Metals. Are they going to drop to zero, or should it be ready, set, pounce, and grab the stuff while it's at a very affordable price?
I think that makes a lot of sense, and the idea of metals to zero is a kind of a mental construct that I have. The metals aren't going to zero. It's about the only thing that wouldn't, because there's nothing else that it has to be, stand in for, because by itself. But if you go in instead of trying to pick the bottom, in other words, you ask yourself, is this the low today? We don't know that. But if you assume prices will go lower, as we've talked many times before, you will approach the market differently than if you think you know where the bottom is, and then if it isn't, you get depressed or you sell out even lower. So I go on the assumption that the prices can go lower, and they may or may not, but it wouldn't surprise me if they did. And so assuming that, I don't go all in at any given price level. So looking at the prices today, if I assume that prices can go lower, then I will approach it by buying in smaller amounts than I would if I thought I knew where the bottom was. And I'll give you a classic example from a mining share without mentioning a name. There's a stock that I follow that I have a position in. It's a very profitable BC Canadian silver producing stock, and it was trading around $10.50 18 months ago. It's now around $2 a share, and yet it has record production. It's decreased its cost of production, but market sentiment doesn't care right now what you're doing. It wants to hammer your stock. So I looked at that and I thought, well, $2 a share is pretty good. It's a lot lower than I bought some of my other shares. But where did it go a few years ago during a similar type of panic situation? I looked at the long-term charts and I found that in 2009, that stock bottomed at 47 cents. Now, it's producing more now than it did then, but it was a producer then as well, too. And so I have to ask myself, if we have another ongoing panic like we did then, could it trade down to that level, even though the, quote, fundamentals don't justify it? And so my reason is that, yes, it could. So if I want more of that stock, I'm not just going to go in and buy it all today. I'm going to buy it in tranches, just like we talked about before, either 3 or 4 tranches at lower and lower prices, looking toward that 50-cent possibility. And I hope the last 2 tranches that I might look to buy never get filled, but if they do, I'll be expecting it to go down there and able to add to my position, and if I'm correct and things turn around, then I can get back into the green zone a lot quicker.
Some people, though, are still predicting that gold prices are nowhere near as low as they might go. One of the firms talking about lower gold is Chart Profit Capital. They're anticipating gold going down to $700 an ounce, not overnight, like it almost, well, I'm not going to say it almost did, because it certainly didn't. But still, they're saying in a couple of years, gold's going to be worth $700 an ounce. one reason I think that it just couldn't do that is the cost of producing gold is much more than that. Roughly, if you're a really efficient producer, maybe $1,200 an ounce to get it out of the ground, and for the smaller companies, much more than that. People won't be mining gold if they can't make any money on it, and that would start shorting supplies. $700 an ounce doesn't seem reasonable, but is it possible?
Well, anything is possible, and the price of any kind of a commodity can go below the cost of production and stay there for some time. But I would suggest that people that write things like that $700 gold, look at their track record. Many of these people have been bearish through the entire gold bull market. They were talking that at 300, they said it was going to go to 150. And so some of these people, you know, the old broken clock right twice a day is correct. And so a lot of the people that are writing these articles have never been bullish on the precious metals. And I would look at the source before I ask myself, I'll just take this at face value. But the reality is the price can go lower. It may go down to $1,100. I don't think so, but it could. But the point being, when things are on sale that you want, you buy them. And the very people that wouldn't touch gold today at $1,350, if and when, which I believe it will, goes above $2,000, they'll try to be buying all they can get. And the reality too here, if you talk to some of the metals dealers, which I have, is that the product is very, very difficult to get out there, and the premiums are very high. So you can expect to wait anywhere from 4 weeks to 3 months to get silver, and you're going to pay a very hefty premium over what the spot price is today if you could get it.
David, you told me quite some time ago, you take a look at prices that are out there and you compare them to prices you see in a grocery store. Tell us about that famous sack of flour.
Well, if we think about the analogy of going into the grocery store and there was a 10-pound bag of gold medal flour that normally costs $3.98 and it was on sale for $1.89, you wouldn't go, oh, I'm not going to touch that flour. I'm going to wait until it gets back up to the regular price or goes higher. But yet that's what people do when they think of mining stocks and precious metals. If the price goes down, they don't want to buy it or they sell it. And if it goes up, then they're interested in it. So we have to go against your emotions in the markets in order to make the money. Now, of course, you have to ask yourself, the stock you want to buy, is it still a viable company? Is it doing what it said it was going to do? Is it making a profit? And if it is, then you go, well, this is an opportunity for me. And if we look back over the 10, 12 years of the current bull market, we found several opportunities like this where you could buy really good stocks that are still good performers, some of whom pay dividends, and you're being offered a fire sale price right now, 50, 60, 70% off. But it takes courage to buy it, and as we've said before, you really have to go against your emotions. And, people like Jim Sinclair have written about this, and David Morgan discusses it. So you really have to go against your emotions if you're going to be able to get a position and hold on to it and not sell into a panic.
You've also mentioned humans are pack animals. We see the crowd going in one direction. We jump in with that crowd, not really paying attention where that crowd is headed to.
That's really true. It's like fish in a pool in a low water summer stream pool, and somebody tosses a rock in, or an eagle's visage goes across the top, and they all go all over the place. And so I can tell you that I'm not standing here saying, oh, it's easy to buy. My stomach, I've got butterflies today, I have to tell you that. But you know what? I've learned over time that when I have that feeling, and when I go and look at the stocks that I feel are best of breed, that's the time I should be looking to buy. And so I'm going to try to carry out what I've done before and what Jim Sinclair and others have discussed, and go against the grain to buy these companies. And if they drop lower, I'm going to be there to pick up some more shares, and I'm going to be nervous and butterflies in the stomach. But I know that if my belief is correct that the bull market is still intact, it will be the correct thing to do.
I'm thinking even if gold went down to this theoretical price of $700 an ounce, it wouldn't stay there for long, because people would, again, be taking a look at the overall price and wondering, with the world demand for gold right now, the way China, India, and Russia have been snapping it up as nations and encouraging their own citizens to snap it up as well, they're certainly not going to sit there and see their assets drop down to that level. I'm sure they would do something to try to bring the price up.
The fundamentals are still intact. Countries around the world are still producing enormous amounts of paper money, and that is going to be reflected at some point in the degradation of our purchasing power of our fiat currency. And so that's the way to bet. If you look at the way history has gone with the metals, that's the way to bet. And a person just has to follow their belief structure and then try to act as rationally as possible when other people are panicking.
Countries like Japan, the U.S., Britain, who have been printing a lot of money, the euro's being produced at a horrendous rate as well, they're all saying that this big money production is pretty well over. They're going to go back to a regular production rate, in other words, just replacing the bills that wear out and so on. Is that going to be a factor?
Talk about that, but the Japanese have committed to practically doubling their money supply in a short time, and they want to create an inflationary situation to prop up their currency. And the United States is still printing massive amounts of money, and it's not having much effect. But the thing that central governments fear more than anything else is a deflationary situation where asset prices decline. And gold and silver are indicators of how successful or unsuccessful that is. And so that's why they're cheerleaders and indeed supporters and help push these prices down when they are in a precarious state, which is what they were around 1550. I can guarantee you that the Federal Reserve was not unhappy to see gold break down, and no doubt some of their minions were helpful in creating that situation. But the central banks of the world are still buying gold, and they're likely to continue to do so for quite some time.
Now, maybe, David, this isn't the center of your expertise, but copper prices might be affected here by that giant slide they had at the Bigham Canyon copper mine in Utah. It's the biggest hole in the world. It produces 20% of the U.S.'s copper. So are copper prices going to go up? And you also told me copper quite often is found at the same time as you find gold. Is there any gold in that hole that might be part of this
There's not any gold,
disaster?
But there's silver, and it's around 10% of the U.S. production of silver, which is by mandate, U.S. Produced silver has to be used in the production of silver eagles. So it was a copper, gold, and silver producer, and copper was the biggest thing in terms of tonnage and this type of a thing, but definitely it could be out of action for up to a year. So this, along with other untoward events in the world of either producing mines or ones that are slated for production, is going to create, more constrictions on the price of the metals. And if our economies move forward globally, the demand for copper is going to keep going up. So this is just one more indicator that it's so difficult to predict metals prices. And getting back to gold and silver, and you're even going to see the same thing with copper on a percentage basis, we're going to see bigger and bigger swings both up and down. If gold can drop $160 in one day, it can go up $160 in another day. And I think as this sort of thing shakes itself out over the coming weeks, you're going to see a situation where silver might be down $2 on the day and then close up $3. And that's going to shock a lot of people. That's unpredictable, but it can happen, and eventually it will happen. And so trying to predict where prices are going to go rather than buying weakness and holding into strength and selling a little bit, I think is going to be a much less dangerous procedure than trying to predict where they are and trying to buy the bottom and sell the top.
David, you warned quite some time ago that you should keep the Gravol handy, that it's going to be a pretty bumpy ride. And you were mentioning even yourself, who knows how the market can really swing rapidly at any one time. Be ready for this bumpy stuff. You have to keep your head up in this game because it changes not just by the day or the month or the week. It changes by the second.
It really does. We're having more and more big-scale events happen which affect the markets and which affect people's psyche. For example, this terrible situation with the Boston Marathon, this just makes you sick at your stomach to see that happen. And all that plays into the panic that people feel. They feel less assured. They've already been concerned financially, and then to have this happen, they're concerned for their own safety. So we're living in a very unpredictable world, and we're living through a paradigm shift. And I believe in some years we come out the other side and we're better for it. But right now, it's a pretty spooky place. And I do believe that a core holding of precious metals in one's own hand, where they can be reached, is going to be something that will make people feel much more comfortable psychologically than if they didn't have any. And certainly having some of the mining shares as well, I think it really makes a lot of sense.
Well, having seen that giant correction, as some people would call it, in the price of gold, people better stay tuned to this show because you're going to need some good advice to get through these stormy waters.
Well, we'll keep looking at what's going on and giving the best advice we can. And, on the Morgan Report, we're working on the third segment of a 10-year outlook for silver. And I'll tell you, you can really see just how many questions are out there about what the supply is going to be in addition to the demand. So we just have to keep up, as you say, day by day, and when new information becomes available, we input that. And we always understand, just like David Morgan has always said, that the market knows more than you or I do, and we try to listen to it as best we can, and we try to be humble in its presence rather than thinking that we know what's going to happen.
I hope your ear doesn't get hurt by keeping it to the ground, but you'll have to in this case.
I'll be sure to use some ear protection.
Thank you very much, David. My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.